guys, welcome to NFX Trading Academy. Today we're going to talk about trend line, right? And I'm going to answer a couple of questions that a lot of people have kind of find it difficult to answer by themselves, right? So the first thing we're going to talk about today is how to draw a trend line, right? So how to draw a trend line. Trend line is one of the most used tools on TradingView, right? Because it makes it very, very easy for us to spot trends. And we have three types of trends. We have the uptrends, we have the downtrends, and we have the sideways trends, which we call ranging trends, right? So the first thing we're going to talk about in this video is how to draw a trend line. So in the next video, we're going to talk about how to draw a trend line. So with that being said, I want you guys to take a book and pen and jot this that some tips I'm about to say in this video. Jot it down and stay tuned to the end of the video. So what are trend lines? So trend lines are key levels which are formed in the trending market, right? They are key levels which are formed in the trending market. As I said previously, we have three types of trend. We have the uptrend, we have the downtrend, and we have the sideways trend, which we also know as the ranging trend. Now, what type of trend is this? This is a what? This is a uptrend. That's correct. And what type of trend is this? This is a what? This is a downtrend. And what type of trend is this? This is a sideways trend, which we also call as a ranging trend. Now, the usefulness of a trend line is for us to quickly spot these trends, either a uptrend or a downtrend. This is a tool which we use in TradingView to spot a trend. It's called the trend line. All you have to do is to click on it and try to have multiple touches on the trend line. Right? Try to put your trend line where it can have multiple touches. Right? I have gotten a lot of questions are: what is the best way to draw a trend line? Is it on the wick or on the body of the candle? Right, the answer is to draw your trend line where you can get a lot of touches, right? So if you can get it, if you can draw a trend line where it has a lot of touches, that means the zone where you draw that trend line is a very, very strong support or resistance. That is to say, market is rejecting off of that zone because there is something going on in that zone which we don't see. So where the market rejects off multiple times is where you can draw our trend line in it. Right. So with that being said, let me show you guys on the chart. Now, this is it on the chart right there. So we want to be looking at this zone right here. This zone that is inside this box right here. Now, what type of trend is this? Like, say, this is a what? This is a downtrend, right? Market creating a what? Lower high and the wall and the lower low. But for a certain reason, markets stopped at this zone right here, creating a double bottom. So in this next video, I'm going to be dropping a video that is talking on chart patterns, right? I'll be dropping a video talking about chart patterns. Now, as you all can see, this is a what? This is a support zone. Alright, market fails to retest off of this zone. Now, but if we are to draw our trend line, we have to draw the trend line from the highest to the lowest. As you can see, this is the highest point, and market have touches. Right, this is the first touch, second touch, and the third touch here, which is kind of partial, right? Which I might not validate this, but the valid touches are only two, which are this and this, right? So as you can see, market, right, and as you can see, market will break the trend line, which causes us to have a change of character to the upside. This is where the change of character is right here. I hope you guys are getting me. So trend line literally means we trying to look for a zone that the market is retesting multiple times. So that is the perfect way to draw a trend line. And as you can see, we have our first touch here, second touch here. So the third touch, we are going to try to look for the third touch around this zone. Right, so now the market changed character from being a downtrend to now becoming a what? Becoming an uptrend. So this is a what? This is a downtrend, right? And this is a what? This uptrend. Hope you guys understand what I'm talking about. So this is where market was retested off the trend, and we have a push in market price, and we are expecting the market would come and retest this trend zone right again and what continue to the upside, right? So there are two types of uh trends. We have the continuation, right? So there are two types of pattern while trading the trend line strategy, right? There are two types of pattern. We have the continuation pattern and the breakout pattern. Continuation pattern is a very easy thing to explain. That is to say, the market, immediately it hits the trend line, it continues to the upside. That is, once the market gravitates towards the uptrend direction, uptrend trend line, the market continues to the upside. It moves to the upside. While the breakout pattern literally means the market was breaking out of the trend line and having to retest back the trend line and continue to the what? To the downside. So those are the two type of pattern we have. We have the continuation pattern and the breakout pattern. Now, so what type of pattern are we expecting now on this trend line? Let's see. So we all have to do now. We have to split the market and see if the market will retest off the trend line, and this and that's it. The market does what? The market retested off the trend line, and as you can see, immediately the market retest off the trend line. Did we what do we notice? We notice that the market was moves to the upside. So what type of pattern is this? This is a what? Continuation pattern. That is, market moves right from this zone to the highest point of this zone. Okay, this is the highest point, and it tests off the trend line, and now is moving to the upside. Though the movement can be temporary, and the movement can continue as it goes. So let's play it out to see, and eventually we have a what? A breakout, as you can see. So we have two types of pattern right here. We have the continuation, which didn't it didn't play out very nicely, but we now have a what? A breakout. So what are we expecting the market to do? We are expecting it to move back up and continue to the downside, because now the trend line has been broken, which indicates that the market is now moving towards to the downside. Let's play the market to see what the market has to do. So see, market was tested, move up a bit, but not up to the trend line, and it's also will continue going to the downside. So trend line is just you trying to indicate whether the market is in an uptrend or it is in a downtrend. So let me find a perfect example of how trend line works. Now, this is the perfect way to draw a trend line. As you can see, the market literally is in a what? Is in the downtrend. Why is it in a downtrend? As you can see, if we are to draw our trend line from top to bottom, you can see the market is what? Is in a downtrend, right? So we have how many touches right here? We have the first touch, right? We have the second touch. Then we are kind of having a breakout out of the trend line. Now we have a breakout. Now the market is what? Retesting the trend line. So there is a probability that the market is going to what? Push up to the upside, which we don't know because we are not the market. So let's see what the market has to offer. So you see, market didn't what? Didn't push up. Market just only corrected the trend line. So this made us what adjust our trend line to make it now it's having a what is having its touch. And that is it about the trend line. So trend line is just you drawing a line to know whether the market is in an uptrend or is in a what is in a downtrend. So as you can see, the market is creating lower highs and lower lows. And you can see having a break of structure right here, lower highs, and we have the lower low down there, lower low, break of structure. I hope you guys understand what I just explained right now. So now the market average was a break of structure to the downside. We are expecting the market to what move to the upside a little bit, as you can see, to have a little bit of retest or correction to the trend line. So we might expect the market to test off this zone or a little bit. And as you can see, market was texted off the trend line, making it how many touches right now? I think we're having our fourth touch right now. So now we have to wait to see what the market has to offer. Either it breaks out or it continues to the downside. Because now we can now say we are in a what? We are in a downtrend. Because markets have been what retesting off the trend line multiple times. First, second, third. Now it's having the fourth touch. So let's see what the market has to offer again. Now the market breaks off of the trend line and they're retesting it. So market can either continue this way, moving to the upside, making it to be a breakout pattern, or it can continue to move to the downside and have a breakout structure right here, making it to be a correctional move. I guess getting me. So if the market did not break below this breakout, if the market did not break below this breakout structure right here, is we are going to call it a what a breakout pattern. But if it does, if it breaks below the breakout structure, it's going to be a correctional uh, trend pattern. That is, we will have to adjust our trend line again to this extent or something like this. We have to adjust our trend line like this. Are you guys getting me? So the key in this trend line is to identify your lower high and your lower low. Because you trading, you guys shouldn't be deceived or uh cajoled that you can only trade trend line and be profitable. No, you can't. There are some things you also have to look into it for you to draw a perfect trend line. And the first tip is to know the movement of the market, to map out your lower high and your lower low, and to map out your what break of structure. Are you getting me? So now, as you can see, we have the what? We have a downtrend right here, which have a break of structure. So immediately we have a break of structure. We know this is lower the highest parts in the market, right? So we put our first trend line there. If the market didn't break below, the market didn't break above the previous high, we still regard it as a downtrend. Are you getting me? So as you all can see right here, we have this thing. This red, I'm going to paint this red. Let me make purple and make it thick. Are you getting me? So this is the first tip in drawing a perfect trend line. Is to understand your structure. In the first market, structure is key. I do tell my student the structure is key in the first market. Now, we have the uptrend, we have a move to the upside, so we move to the downside. So technically, the perfect place to draw our lower high is here, right here. But it's going to make our structure should be jaga jaga. I don't know if you guys understand that. It's not going to be it's not going to be clean. So we can regard this as our what highest point. And okay. And this is also the point that make or have a valid break of structure. So this is technically a valid lower high. Now, if the market doesn't break to the upside of this, we still count it as a downtrend. So let me scrap all this and explain again from the beginning. Right, so I want you guys to calm down and try to understand what I'm trying uh to talk about. All right, so the first thing in drawing a perfect trend line is to understand the structure. Understand the market structure. Market structure is key. Now, I want you guys to concentrate on this right now. The first thing to do is to draw your structure. What type of trend is this? This is a what? This is an uptrend, right? Or our markets having a what? Having a break of structure right there. All right. So what is the low of this? Is the low of the market? Sorry, this is low of the market. If the market breaks below this, we are going to have a change in character. Right? If the market breaks below this, we are going to have a what? A change in character. See, drawing a trend line is very, very, very easy. But the first thing you have to understand is market structure. I don't know if I have done a video on it. I have to go and check. But if I haven't done a video on market structure, I will have to do it again. Or if I watch it and I think it isn't detailed enough, I'll have to make a detailed video on market structure. Without market structure, you can't understand how to draw a trend line. Because I remember back then when I was starting my own journey, I just usually look at something and just draw some shit lines, which I hope it respects it. Right? So if you don't understand market structure, you are not going to be able to draw a perfect trend line. The trend line must have multiple touches, but if you can't draw a perfect market structure, you identifying the lower and the lower low, you won't be able to draw a perfect trend line. So the first thing to understand is market structure. And as a whole can see, this is an uptrend. Though market has once been in the downtrend, which is this, having a lower high and lower low, fails to break the previous low, then have a change in character to the upside. This is a break of structure. Are you getting me? This is a break in structure. This should have been a break in structure, but market decided to create a double bottom, which is a strong indication that the market is moving to the upside. Then the confirmation is going to be the break in previous high, which is this, which made it a change of character. Now then, this is going to be a break of structure BOS. So you understanding this is going to make it to be very, very easy for you to draw trend lines. So now you understanding this structure, you have known perfect place to put your trend line. And this is it here. Whether it has multiple touches or not, you understand that this is a downtrend. So if the market breaks above this trend line, that is what we grab as change in character. But what makes it to be very strong for a trader is the trader understanding what market structure is. If you don't understand what market structure is, you can't draw a perfect trend line. I'll be very, very plain with you guys. You can't draw a perfect trend line. So you understanding market structure is the key in drawing a trend line. So in this video, I'll try to include both so that you guys can understand. Now, this is a clean uptrend movement, right? So this is low and this is a low right here. Now, we want to draw a uptrend, trend line, which is this. This is our first touch. This is our second touch. So we anticipate that the third touch should be around. Okay, now we have gotten our third touch already. We have our first touch right here. We have our second touch right here. Then we have our what? Third touch right here. So some people they will think, oh, this is a perfect no, but the market also respects another thing for the market to what reject off of this trend line. The market also respects this break of structure. So there is a high probability that the market might pull below this trend line and continue to upside. But in as much the market did not break below this protected low. I call this a protected low. In as much the market didn't break this protected low, we are still in an uptrend. Are you getting it? So the first thing to do now is to have your what first touch and your second touch. You trying to predict the third touch will just give you headache, right? So what you just have to do now is to wait for the market to have some price action reaction, right? Is to wait for market to have a price action reaction. That is market trying to you start to see the market rejecting off of a specific zone. So what we're going to do now is okay, we are going to anticipate that okay, the market is going to change direction from these two places. This is the highest point the market has been to, or the highest point the market has been. This is where the break of structure lies. This is the highest point. This is the highest point, and this is the lowest point. So this is what we call swing high and swing low. I'm still talking about trend line, but I just want you guys to understand that without a structure, you can't understand what trend line is. So I'm going to make our trend line to be orange so it can stand out. Right? So we have our first touch right here, we have our second touch right here. So our third touch can be in this break of structure, or our third touch can be below this break of structure, which we disregard this second touch. Are you guys getting me? Sometimes we can draw our second touch like this, and market might decide to break below this trend line and make a lot of trader believe that this is a change in character in trend line, but without the trader knowing that it's just a correctional movement in trend line. You understand what I'm talking about in the few minutes right now. So let us move. Let's see what the market has to do. Now, the market has what? Broke below the break of structure, which technically is not meant to do. So now, what we are going to expect now is the market to what? Reject or repair structure. So either go to the downside or, break above. I don't know. We are not the market. But now, we have seen that technically our trend line isn't active again. Because what we were told is that the market is going to reject off of this trend line. What we were told. So as a trader, you would think, oh, it has broken it, the market is downtrend. No, you are just, you're just fluking yourself. You haven't understand anything. So the perfect way to draw a trend line is to identify the highest and the lowest points of the trend. This is the lowest point of this specific trend, and this is the highest point of this specific what? Trend. So if the market breaks below this protected low, that is when we call it change in character. That is, we now disregard this uptrend. We will now start to draw a what? A new downtrend. Hope you guys are getting me. Right, so let me show you what I'm talking about. Let's see what the market has to do. Now you see market has gone into the protected low area. So what we were expecting now is market to what? Reject off of this protected low area. Because it is a strong area for the market. As you can see, market was reject off of it. So now we won't regard this as a change of character. But what we just observe now is that our trend line has been broken already. Because what we were told was that the trend line is a zone that markets reject off. But actually, this trend line was only respected twice, right? The first the first time it's respected, it was here. The second time it's respected, it was also here. I guess get what I'm talking about. So you understanding market structure is key in this forex market. If you don't understand market structure, I can bet it you aren't going anywhere. You aren't going anywhere. So now we have a what? We have a protected low which was now retested. It was now retested. So now markets want to find it, to come to this book of structure and break the protected low. Because now we have 70% chance that the market is going to the downside. So now we've understand that this trend line is no more a valid uptrend. Right? This is a uptrend. It's not more a valid uptrend. It's not going to be, a kind of support to the downside. So let's see what the market has to offer again. So we have a rejection of the break of structure, which I kind of explained before. That if the market breaks below this, we're going to have a rejection out of this zone and continue to the downside. If that is what the market wants to do. Actually, this is what the market might end up doing. So let us just see. Actually, I haven't really, I wasn't prepared for this video. I just opened my laptop and I was doing a video. Right? So let's see. Now you see market is now what? Rejecting off of this break of structure. Why? Because now the trend line is no more active. So now some people now to do not want to try to adjust and stop the trend line and do something like this. That they will not be like, okay, first touch, then okay. See, you guys should not be deceived. There is no magic trend line, there's nothing. Trend line is just like a market structure that you just want to beautify. Right? Just like, because if you understand uptrend and downtrend, I do not see any reason why you should have an extra line again. I don't see any reason. I don't know, but for me, I don't see any reason. So that is why I do encourage my students to understand market structure. So trend line is just like you trying to beautify it again to make it look over complex. No. But once you understand, you see, this life thing is all about understanding. So once you understand how the market structure works, it's going to be very, very, very easy for you to map out your trend line. So now we've known that this trend line is not active again. So this trend line only respected this. This is where the trend line is active. The first touch, the second touch, the third touch, then you have a break in it, blah, 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 stuff like that. But if you understand market structure, I keep saying it, if you understand market structure, it's going to give you a big edge in the forex market. Right? So now that we've seen this, if I'm to place a trade now, we probably place a trade right from this market structure, from this break of structure, because why? We've gotten our highest, we've gotten our break of structure, then we have our protected low, which is about to be broken. Then we must first have a retest in the break of structure. Then we have to enter a sell trade right here. And you can probably look for a zone right here to trade it or enter. But what we know is the market might end up not coming to this zone right here. So you see, this is all about understanding. So now what we are doing now is we are going to look for, now we are drawing another trend line like this. Right? We have our first touch right here. This is going to be our second touch right here. I hope you guys get. So understanding market structure is the key before you can probably want to do anything. So but trend line is just like an additional ingredient to market structure, so just to beautify it. Because if you understand market structure, you'll have known that okay, if you join trend like this, you can just do something like this. You know this is a trend, this is a uptrend because market is above this line. This is a trend line. This is a uptrend. I hope you guys understand. So let's see what this market has to offer us. And that is how we made money. Just by understanding market structure and trend lines. So now as you all can see, we were once in an uptrend, right? One touch, a second touch, just understanding it. We have a what? A protected low that has been broken. So now this protected low we initially turn to a what? Change of character. Now it is no more protected. Now it has been broken. I don't understand if you guys understand. It has been broken. So now our trend line mapping starts now. The highest, the lowest. First touch, second touch is around this zone right here. You can just adjust it. So as a trend line user, I know we have this type of we have this type of mistake that once we see the market bust out of this trend line, we quickly enter the market and go for a buy, and we see markets come back down, and it's because you don't understand market structure. It's because you don't understand market structure. So market breaks below the change of character. Now we've understand that this is a downtrend movement now. So what we want to do now is we want to be looking for a trading opportunity to the downside. So what are we going to do now? We are going to play the market to see what the market has to do. So we test of the trend line. So this is what trend line is actually used for. You see, we've drawn it with anticipated movement, but this isn't strong enough. Market can still break above the trend line to fix some. You see? You see? So there will be a lot of people ready to buy now, and they'll put their stop loss here. And I can bet 100% with them that this isn't the perfect way to draw your trend line. You first map out your market structure before you just draw a trend line. So if trend line is only useful if you don't want to, have lines drawing on your charts, and you just use trend lines. Okay, this is it here. This is all what I've done while drawing these lines. Just daily lines, and this trend line just it will equal to the market structure that you have been drawing previously. So if you don't want to be having something like this, and you can't just draw a trend line. So it's trend line isn't a strategy. So you see now we've our what highest. So this will not be a protected eye. It's going to be a protected eye. Now, if the market did not break above this protected eye, anything the market is doing within this range is called a correctional move. Market is trying to correct the trend line. But for people that are strong-headed on trend line, they might want to enter a buy, which market is going to eventually hit that stop loss. Because this is just you understanding market structure. So let's see what market has to do. In as market didn't break below this, is a what? It's still a downtrend. So this is a correctional move. What market is doing now is what? It's a correctional move. And you see, market is that was stop loss. Even though then they'll be like, oh, trend line is fake, it's a glitch. Okay. Some will also even want to be like, okay, it's retest off of the trend line. They might want to enter another buy position again here. But guess what? Market is going to keep hitting that stop loss because they don't understand market structure. So let's play start again. But for us who understand market structure, we've known that what market just did right here is what is giving a correctional move. So now the correctional move means that now the trend line won't be here right now. The trend line will not be here. Now you see, we moving this from here to here is well, is correction. This is what we call a correctional move. So for people that want to trade trend line because they've gotten the trend line wrong in the first place, they want to go for a buy. But we understand market structure. Now the next protected eye is going to be right here. It's going to be right here. Then our next protected low is going to be right here. Remember, we are using the weak protected. So as you also can see, some people want to put a stop loss here, targets here, but they don't understand market structure. So the protected high protected low to the downside. So if you break below this protected low, it's called a break of structure. It won't be a change of character again because it was an uptrend, then move to downtrend. That's why we have a change of character. So if you understand market structure, you understand what change of character is. So I promise to make another video. If the previous one I dropped isn't detailed enough, I'm going to drop a more detailed explanation on market structure. Now, as you can see, we have a protected and we have a protected low. So what we're going to do now is going to, if the market doesn't break above this protected high, what the market is doing is what we call a what correctional move. How are you getting it? So now, at what point do we expect the market to reject off? I think where the change of character lies, we're expecting market to probably come down from this zone, but market can still go up. What we are not expecting for the market is for it to break our what protected high. Now let's see. It breaks above it and continue back down. And remember, for the trend line users, this is what they're going to draw. This is what they're going to expect. So now they will think that their trend line is actually working, whereas it isn't. It's just fluke. This is when they'll be like, "Oh, trading is scam, trading is scam, trading is not scam. You don't have the right knowledge about it, right?" So now, as you all can see, let's see what the market does. It's respected what we said. In as much the market doesn't break the what protected high, we still regard all these movements as a what correctional movement. So let's see. So now the protected low now change to what a break of structure. BOS, break of structure. Now you can see they'll be like, "Oh, we're in drawdown, blah 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 blah." You see. But for we who understand the market structure, we understand that this is a what? This is a correctional move to the market structure. Then we can draw a trend line like this. I say that trend line isn't really a strategy. It's just you trying to make things easy for you on the chart. It is not a strategy. Don't be deceived. It's only a strategy if you understand market structure very, very well. I hope you guys understand what I'm talking about. So, as you can see, these people that are going for a buy as a trend line user, they are eventually going to hit stop loss. And that is it. They hit their stop loss just because they don't understand market structure. And as you can see, the lines we drew from change of character is what market was what respecting. Alright, so to not make you guys eyes to be cloudy, let me delete some of this and this But remember, we have protected highs and we have what protected low. Then a protected low that got broken is what we call change of character, and after that, we regard this as a what break of structure. Now, as you can see, now where is our protected low? This is where the break of structure lies, right here, and this is where our protected high will be, right here. Right, so this is where the break of structure lies. So this is where we have a what break of structure, and these are protected high. Now we are drawing a trend line. We'll be drawing a trend line like this. Are you getting me? So now we drawing it as market structure. We have this what downtrend with test break of structure, then this. So we won't allow the market to what break below this. We know the market is going to be test off of a starting area, and we have another what break of structure right here, which makes this to now be our protected eye. Sorry. Are you getting it? So now we have a break of structure right here because market has broken it. So what we expect the market to do now is either to be in between this break of structure and protected high, but it is not market is not allowed to break below to break above the protected high. So let's see what it does. Alright, so market is dancing in between it. So what are we looking at now? Now you see market didn't what break above the protected high. Market starts with test off of a certain level. Think off of this level. There's what we call key level. So market is tested off of this level. So now what we're expecting now is for the market to what to break below this break of structure. Right. So I think it's safe for us to enter a trade here, put our stop loss in this protected low, I mean, and then put our break of structure, something like that. Something like this, have a little bit of a 2:1. And let's see what market has to do. Just by understanding market structure. So the market breaks above the protected eye. We can now regard this as a what change character. And we will have a what a break of structure. Ooh, this is a sweet tank. And this is how we got to what a nice risk reward, and it has given us a little bit of a 3:1. So I didn't have it in my schedule to make this video, but I was like, oh, it's been a while. I drop a video on my YouTube. Let me do a video. Then I instantly take on my laptop just because I have the knowledge. So I must not be prepared for me to do a video, right? Because I've gotten the knowledge already and I've gotten the experience and I've understand how this thing works, right? So now as you can see, now we have a break of structure. So our next protected eye will be what? Will be this. So me drawing the line to kind of continuous is going to be okay. To test protected eye, and I think we can regard this as another of this, okay, because it have a break of structure, then we test a little bit, and now it goes down up to this point. So now our next break of structure, our next protected eye is going to be our next protected eye is going to be right here. So if the market breaks above this protected eye, now we have our break of structure right here already. So let's wait for the market to already to We have another one right there. We have another change of character. And sorry, another break of structure right there. So this will be our what? Break of structure. Our next protected low will be where? Will be right here. I getting me. So now we trying to avoid doing all type of thing. This is when we now have to do it the trend line way. Now I have to need to connect a lot of dots together. You can see so drive is a kind of stress. So we can say this is a perfect trend line because it has a lot of touches. You have this touch, you have this touch, and you know. But if you understand market structure, I can say you don't need to draw a trend line. You can only draw a trend line if you just don't want to be drawing market structure lines, just like this, just like what is on my monitor right now. So now just me trying to let you guys understand what how to understand trend line and market structure. So trend line is just trying to connect dots. Right? Yes, that's the right word to use. Trend line is usually used to connect the dots. Is what is a tool we use to what? Connect the dots. First dot, second dot, third dot. So what are the dots? The dot itself is market structure. So now this is a protected eye. This is a break of structure, and I think the best thing to do now is immediately we have a break above the protected eye. We count this as a what? Change in character. So I think we have another break of structure. So as you can see, the break of structure starts, start getting little by little, start getting. It is normal obvious like the rest. That's when you can have at the back of your mind that our market is trying to change. So we can have another protected eye right here. Can you draw the lines here? Yeah, and the market breaks above this. We count it as a what change of character. So now we now understand that the market is trying to move to the upside. So let's see. I don't know. Let's see. All right. Let's see. Okay. We've gotten another what? Another break of structure right here. Right. So it's going back down right there. So as you can see, little by little, we are now having another trend line. As you can see, market starts having this little things. So once you start seeing something like this, you understand that now market is trying to move to the upside. But the first thing for us to do is to understand where our protected high and protected low is. So this is our protected high, then our protected low will be this zone right here. Down. So in the middle is over. So now market breaking above that. So now the market are broken above that, we understand that now the market has potentials of going to the upside. So now, for what I've just explained, our downtrend is something like this. So this is how what our downtrend will look like, and it's kind of it's kind of kind of quack or kind of don't look clean enough. But trend line, like I said, is just used to just connect the dots of market structure. Sorry about that. So trend line is used to connect the dots of market structure. So if you understand market structure, you drawing a trend line, it won't be an issue. Right, so now we have a protected data that is about to be broken. It has been broken already. So now we can now, have a what, a buy trade now. So immediately it got broken, we can have a I don't know. I don't know if it's going to be too big, or have a stop loss below the protected low. Take profits can be high enough. Something like that, but something like this is too. Let's look for something realistic. Let's say you can put out stop loss below this. Yes, I'm cool. Put out take profits above. Let's see what market has to do now. So now we've understand that market now is now having a change of color. So this protected high equivalent turn to what? A change of automatically change to what? Change of color. I'm not going to do this. Let's play the market. So that is it about today. Lesson is that trend line is used to connect the dots in the forex market, right? So trend line is usually used to connect the dots in the forex market. So with that being said, let's try to recap all what we've said, what I've explained. The first thing is we have three type of trend. We have the uptrend, we have the downtrend, and we have the sideways trend, which is known as ranging. And market structure is the key to understanding trend line. So trend line is used to what? Is used to connect the dots. And we have two type of trend pattern. We have the continuation and we have the breakout. So the breakout is usually when a trend line is what is not being followed. Like this, we have tests in this trend line, another test again this trend line. Then market breaks below, breaks the trend line. Now call this a what? A breakout trend. This is a what? This is a breakout trend. Then we have continuation trend. That is market keeps respecting the trend. So with that being said, that is all for trend line, and I think I've answered all the questions I think I've received in my DM already. So trend line, if for touches, just it doesn't mean it isn't that required for you to use the wick or the body. Just draw a trend line where it has high potential of touch, or where it has more touches. Like I said, trend line is used towards connect dot. Sorry, there's a Fibonacci. So used to connect the dot. So to some people, they might say this is their own trend line. Something like this. Bro. For me, I don't use trend line actually. I don't use trend line. So that is it about this video. I'll see you guys in the next video, and be expecting a more detailed video on market structure. I promise you, if you watch the video on the next video I'm going to drop, which is going to be beginner to advanced market structure, I promise you guys, you are going to understand everything you have to know about market structure absolutely for free. So for you to, acknowledge me, all what I need you guys to do is just, click on the subscribe button and follow me on my social media pages, FXAMIG on Instagram. All what I need you guys to do is just to follow me on my social media, like and subscribe to this page. See you guys in the next video. Catch ya.